Hey everyone, Dr. Keith Grosshans here. Like many of you, I've been looking for ways to build income that doesn't require more of my clinical time. The challenge has always been finding investments that make sense for busy physicians, ones that don't demand more of our already limited hours. This is why I've been drawn to mortgage note investing. These debt instruments, secured by real estate, can provide consistent returns without requiring us to be landlords or property managers. The key to success with notes is having a systematic evaluation process, something that lets you quickly assess opportunities and make informed decisions, even with a busy clinical schedule. Today, I'm sharing the framework I use to evaluate mortgage note investments in about 30 minutes. I'll walk you through this process using a real example, my first note purchase on a property in Indiana that's currently generating an 11.82% return. If you're interested in applying your analytical skills to build income outside of clinical practice, this framework might be exactly what you need. Let me take you back to May 2024. I'd been researching alternative investments for months, trying to find something that would allow me to generate meaningful income without requiring more of my time. I also wanted lower volatility than the stock market could offer, and I didn't want to be involved in the headaches of direct property ownership. I had just completed Eddie Speed's note school training and was eager to put what I'd learned into practice. But I was also cautious about making my first move. As physicians, we're trained to be thorough before making important decisions. I needed a system that would allow me to evaluate notes efficiently and effectively. I realized that the systematic thinking that we use every day in medicine could work well for evaluating investments too. In medicine, we follow a structured approach to diagnosis. I realized I could create a similar framework for note investing. I could gather all the information about the note and the property, then examine the legal and financial parameters, then review relevant reports and searches, and analyze the key risk factors before making an informed investment decision. For this, I developed a 7-point framework to systematically evaluate note investments. Let me show you how I applied it to my first deal, a performing partial note on a single-family home in Indianapolis, Indiana. My first step was to be familiar with and evaluate Indiana's laws, including its foreclosure laws. I needed to understand the legal environment to assess my potential risks. Indiana is a non-judicial foreclosure state, which generally means a more streamlined process if the borrower stops paying. This was a positive factor in my decision-making process. Next came the financial assessment. What made this first deal interesting is that it was a partial note, meaning I was purchasing only a portion of the future payments rather than the entire note. Here were the details. The total unpaid principal balance was just over $84,000. The note interest rate was 12%, and monthly payments were $1,237 per month. I purchased a total of 63 payments for just under $58,000. This gave me a very strong yield while limiting my investment horizon to just over 5 years. This served as a solid first investment opportunity in the note space. I couldn't fly to Indianapolis for a physical inspection, nor would this be typical for note investment, so I used digital tools for a virtual assessment of the property. Google Street View showed a well-maintained, ranch-style home in a stable working-class neighborhood. Public records indicated consistent ownership patterns on the street and steady property value growth over time. The digital reconnaissance gave me confidence in the underlying collateral. The property was valued at approximately $115,000, giving me crucial data points. The loan to value with the current balance was approximately 74%. My investment to value ratio was about 50%. This provided a substantial margin of safety. Even if property values declined somewhat, my investment would still be protected by the equity cushion. The payment history showed consistent on-time payments. What gave me additional confidence was that I was purchasing this partial note directly from Eddie Speed's note investing company. They'd already done significant borrower vetting, but I still did my own analysis just to be sure. A strong payment history is one of the best predictors of future performance, exactly the kind of evidence-based approach we value in medicine. County records showed property taxes were current with no history of delinquency. The loan servicer collected escrow payments monthly, which further reduced my risk. This step is critical because tax liens take priority over mortgage liens, something that many new note investors overlook. Finally, I reviewed all legal documents, the original note, mortgage, assignments, and the servicer agreements. With the partial note, the documentation is slightly simplified since I'm not taking over the entire loan, but it's still critical to ensure that everything is in order and looks correct. Proper documentation protects your investment and ensures you have legal standing if issues arise down the road. After completing my analysis, I moved forward with the purchase at just under $58,000 for the 63 payments. My first payment came in early September of 2024, and the entire valuation process took me no more than 35 minutes spread across a couple of my lunch breaks. I'm happy to report that this note is currently yielding just under 12%, at 11.82% to be exact. It has been paying on time every single month since I closed on it. I think this is exactly the kind of investment that can help physicians create alternative income streams while maintaining clinical practice. But more importantly, this framework has allowed me to evaluate dozens of additional deals efficiently, helping me build a portfolio that gives me options I never had before. And the clinical thinking I've applied to this process has given me a distinct advantage that I believe every physician investor can leverage. Now I want to give you the exact framework I used for that Indiana property and every deal since. I've refined the system through my training and experience to create the Physician's 7-point note deal analysis framework, a step-by-step process designed specifically for busy medical professionals. This free resource includes a detailed breakdown of all 7 evaluation points, time estimates for each step to help you fit this into your busy clinical schedule, key questions to ask for each component, red flags that warrant immediate rejection, and a due diligence checklist you can use for every potential deal. I'm offering this framework to you at no cost because I believe physicians deserve better options. We spent years training to help others. Now it's time to help ourselves create sustainable careers and lives. You can access the framework through the link in the description below. It's completely free. Check out the framework and see how the systematic thinking skills you already have transfer perfectly to note investing. This approach can help you evaluate investment opportunities efficiently, even with your busy schedule. As always, I'm Dr. Keith Grosshans, helping you secure financial independence through strategic mortgage note investing.